While the world watches the daily fluctuations of the Nasdaq, a quiet, mathematical terminal velocity is being reached in a single asset class. Most people see Michael Saylor as a high-conviction investor. A few see him as a radical. But what if we are misreading his intent entirely? What if the aggressive accumulation we are witnessing isn't a bet on a price target, but a calculated response to the structural collapse of the global accounting system? We've been taught to measure Bitcoin in dollars, but Saylor is playing a game where the dollar is the ghost and Bitcoin is the only solid ground. The question isn't whether Bitcoin hits 1 million. The question is, what does $1 million Bitcoin tell us about the state of the world we'll be living in when it happens?
The mainstream narrative is simple. Saylor is a permeable, leveraging a software company to buy a volatile digital coin. The media paints this as a dangerous gamble, a top-of-the-market obsession that will eventually end in a margin call heard round the world. To the average observer, the goal is profit, buying at 50,000 to sell at 100,000. This is the retail mindset, treating Bitcoin as a trade, a way to get more fiat currency. They see strategy as a proxy ETF, a way for Wall Street to get exposure without the custody headache. But this surface-level analysis misses the psychological shift from investing to homesteading on the digital frontier. Beneath the surface, the smart money is beginning to realize that we aren't in a bull market. We are in a transition of state. Institutional behavior is shifting from speculation to total reserve replacement. When BlackRock and Fidelity entered the room, the game changed from, is this real, to how much can we own before the liquidity dries up? Saylor isn't looking for an exit ramp because he realized the exit ramp leads back into a burning building. He is front-running a global short squeeze on the concept of money itself. He understands that in a world of infinite debt, the only thing that matters is the absolute scarcity of the ledger. He isn't preparing for a price spike. He's preparing for a world where Bitcoin is the only remaining pristine collateral accepted for international settlement. And Michael Saylor tries to explain his thesis by seeing Bitcoin as digital property.
How do I launch something into cyberspace such that it moves friction-free? And the solution is a decentralized proof-of-work network, right? Satoshi's solution was, I'm going to establish a protocol running on a distributed set of computers that will maintain a constant supply of never more than 21 million Bitcoin subdividable by 100 million Satoshis, each transferable via transferring private keys. Now, the innovation is to create that in a ethical, durable fashion, right? The ethical innovation is, I want it to be property and not a security. A bushel of corn, an acre of land, a stack of lumber, and a bar of gold, and a Bitcoin are all property. And that means they're all commonly occurring elements in the world. You could call them commodities, but commodity is a little bit misleading, and I'll tell you why in a second. But they're all distinguished by the fact that no one entity or person or government controls them. If you have a barrel of oil and you're in Ukraine versus Russia versus Saudi Arabia versus the US, you have a barrel of oil, right? And it doesn't matter what the premier in Japan or the mayor of Miami Beach thinks about your barrel. They cannot wave their hand and make it not a barrel of oil or a cord of wood, right? And so property is just a naturally occurring element in the universe, right? As soon as you look at what's in the best interest of the human race, the civilization, you realize that if you want an ethical path forward, it needs to be based on common property, which is fair. And the way you get to a common property is through an open, permissionless protocol. If it's not open, right, if it's proprietary and I know what the code says and you don't know what the code says, that makes it a security. If if it's permissioned, if you're not allowed on my network, or if you can be censored or booted off my network, that also makes it a security. So when I talk about property, I mean, the challenge here is, how do I create something that's equivalent to a barrel of oil in cyberspace? And that means it has to be a non-sovereign bearer instrument, open, permissionless, not censorable, right? If I could do that, then I could deliver you 10,000 dematerialized barrels of oil, and you would take settlement of them, and you would know that you have possession of that property, irregardless of the opinion of any politician or any company or anybody else in the world.
When Saylor speaks about property, he is bypassing the currency debate entirely. He is telling you that Bitcoin is the first time in human history we have discovered digital land that cannot be seized, diluted, or moved by a central authority. To the viewer, this feels like a heavy realization. The house you own, the stocks you hold, and the cash in your bank are all permissioned assets. Bitcoin is the only thing you truly own. We are currently witnessing a perfect storm of global liquidity and currency debasement. The Federal Reserve is trapped in a debt spiral where interest payments on U.S. debt are eclipsing the defense budget. This isn't a policy choice, it's a mathematical certainty. As the Fed is forced to move toward yield curve control to keep the system from snapping, they will have to flood the market with more liquidity. This is the debasement trigger. Every dollar printed makes the fixed supply of 21 million Bitcoins more valuable by default.
I've been terming this the gradual print, which is to say that we are away from Fed balance sheet reduction. We've shifted toward gradual Fed balance sheet increases. I tend to take the under on those that are calling for like major printing this year or next. There are scenarios where it could happen, but those aren't in my base case. And with this new nominee, I have to look at the other side of the scenario, which is, what are scenarios that could reduce the balance sheet because we have potentially new leadership in place. Again, they'd be somewhat outside of my base case, but they've somewhat increased in odds because of this. And then interest rates, there are some environments where interest rates are the bottleneck, and that they are what is, say, holding back bank lending, which would contribute to broad money supply growth. And there are times where they're not the bottleneck. And so you can have a situation where you cut interest rates and it's not that impactful because they weren't the bottleneck. So that you cut short-term interest rates and maybe long-end rates just stay flattish. There's in their range up and down depending on, macro conditions, not really trending in any direction. And you can cut interest rates by a decent amount and the house financing doesn't really get any easier. And so that more affects, currency differentials. It can have an effect on more shorter term, kind of business borrowing, which is relevant. It's just not massive. And so I would generally think that whoever he picks is going to be pretty dovish on rates. I think that's been pretty much set in stone. Balance sheet's a little bit more of a question, but I generally think balance sheet is kind of gradually up and to the right. And I think that the combination of rates and balance sheet will keep the broad money supply kind of gradually up and to the right for the next couple of years. So I generally am fading more the extreme ends on either side. We have gone through a shift more toward that balance sheet increases. And kind of the note on Fed independence, because we've gone back and forth about this a little bit. It's like the set of circumstances sharply narrowed with the global financial crisis. And that's why in many cases, it's kind of seemed like Fed independence has gone away because there's the number of options they have has shrunk. And so there's generally been this case where the government and the Fed are moving in the same direction. And it seems like capture, which I think is partially true, but it's also that it's not really captured if they both agree anyway. They're just both going and it's like the circumstances have captured them. The high debt levels have captured them. If their shadow mandate is maintained financial stability, by extension, it means maintaining treasury market stability, which means even as treasury markets blow out, you sometimes print money to keep them stable. So the circumstances have kind of reduce the number of options they have over time. And then only in kind of recent times has there been more overt challenges to independence, which is that we're not in an extreme environment right now. We're not in a global financial crisis. We're not in a lockdown scenario. So there's a somewhat competing opinions around what policy should be. And that's where that actual independence is kind of challenged for the first time, really ever since this era. Even throughout the global financial crisis, there were only little mini challenges to it. I mean, Trump in his first term did a little bit of a mini challenge on it, but this is a more overt challenge on it.
Lyn Alden is highlighting the hidden tax. Every time the money supply expands to pay for government debt, your purchasing power is stolen. Saylor's $1 million Bitcoin thesis isn't based on hype. It's based on the fact that if the dollar supply doubles and the Bitcoin supply stays the same, the price must reflect that reality. It is a lifeboat being built while the ship is still in harbor, and most people are still arguing about the color of the paint. If this thesis is correct, the shift of power will be the greatest transfer of wealth in human history. We are moving from financial elites who control the printing press to digital elites who secure the network. The risk isn't that Bitcoin goes to zero. The risk is that you are left holding a currency that no longer functions as a store of value. The retail investor is distracted by altcoin season and 10x meme coins, while the giants are quietly vacuuming up the only asset that actually solves the 40-year debt problem. This is a game of musical chairs, and the music is starting to slow down. When the chair costs $1 million, you'll realize the price.
I know you have been a leader in willing to embrace crypto. You have made it so that people can be in Bitcoin. We hear that you are thinking about Ethereum. These are incredible things. Now, BlackRock is not known as a gunslinger by any means. So you obviously must believe that this maybe is an alternative. Is this an alternative in order to be able, because of a deficit, maybe something long-term people should have?
Absolutely. As you know, I was a skeptic.
Yes.
I was a proud skeptic. And I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there is a role for Bitcoin in portfolios. I believe you're going to see that as one of the asset classes that we all look at. I look at it as digital gold, as I said before, and I do believe there's a real need for everyone to look at it as one alternative to, I would say, the optimism that I have in the world. If you want to hedge hope, Bitcoin is not an instrument for hope unless you're hopeful you're going to make a lot of money on it. But I look at it as a vehicle in which you're expressing your financial acumen in something that you're more frightened of the world, you're more frightened of your existence. And I believe there's a great industrial use for it. And I think a lot of people are missing that.
I couldn't agree more. I changed my mind about it when you did. You admitted my thinking. It was like, you don't believe in it, so I can't believe it. I want to thank Larry Fink for the message of optimism.
When the world's largest asset manager calls Bitcoin a flight to quality, the secret is officially out. He is signaling to every pension fund and sovereign wealth fund on the planet that the safety has moved. The psychological impact on the audience should be clear. The very people who told you to be afraid of Bitcoin are now the ones buying it by the billions. In the end, the question of is Saylor secretly preparing for a $1 million Bitcoin might be the wrong question.
Perhaps he isn't preparing. Perhaps he is simply the first one to accept the inevitable. We are living through the final chapters of a monetary system that was designed to fail. In a world where everything can be faked, printed, or manipulated, truth becomes the most valuable commodity. Bitcoin is the truth machine. And as the world gets noisier, the signal of 21 million becomes the only thing worth listening to. The choice isn't whether to buy or sell. The choice is whether you want to belong to the old world of debt or the new world of math. Choose wisely.